Good morning, everyone. 6:40 over here in New York. Looking at EUR USD this morning because it's really up for conversation. And let's talk about why. So let's look at this monthly candle. We're going to do a top-down analysis. So we're looking at the monthly time frame on EUR USD, and look at the size of this bull candle right here. It just shot up. So we respect this low from 2017 to 15. And 2020 we're just up. Okay, so what we're going to do is we're going to highlight this area right here. uh, uh, cool. And we'll drop it down to the week. Now we can see we had 3 solid weeks of bull momentum. Now does this mean that the market's going to keep going up? Because what other traders are going to see is that it's coming to a zone. It's coming to a previous area, and they're looking for a reaction. Now from experience, I can say that the market does not just continuously go up and up and up. These candles you see right here, yes, we had 3 weeks of bull movement, but I guarantee you it went up, down, up, down, up, up, down, up, down, up. Like, it doesn't go straight up. It does fake you out to make you think that it's going to sell, but the ultimate move is going up. Now, daily time frame. See what I'm saying? Went up, came down here to psych people out, came a little low for a sell, and then ultimately went up. That's just how it goes. You can't just anticipate that your trade is going to go up and then constantly just go up. You have to anticipate that this is going to happen. And it's just the market just making its move. This is money that's being collected and traded between the banks. These are contracts that are being accumulated. This is everything that goes on in the world, but it's not just 1, 2, 3. They have to make sure that we have enough currency. They have to make sure enough money is being moved between the banks, et cetera, et cetera. So we're on a daily time frame now. We saw on the monthly time frame that we had a lot of bull momentum. And as you concise down, you get a breakdown of the candles. So more information, more data for you to analyze. So right here, we're looking at that same circle from the monthly time frame, and we can see that prices broke through this area, shot up, right? So let's go on to the 4-hour and see what's going on. Okay, so here we have the 4-hour time frame. We can see at the previous area over here would have been this area, so a lot of people would have been looking for the sell, right? And that's exactly what we're seeing here. Some would say this is a head and shoulder right here, and it is. Left shoulder, head, right shoulder, retest, down. And it did put you in profit, but ultimately the buyers were the winners. So take it down to the 1-hour. And right now we're in the overlap of London session and New York session. So New York is going to open at 6 to 8 a.m. You don't really get a lot of movement. And one thing I always like to tell our students is you have time to enter trades as long as you show up for work. So yes, Forex is all about timing. You want to make sure you have a good entry. But if you do the work, for instance, if you're doing the screen time, marking up charts, then it's like, for instance, we're all here right now just looking at TradingView, looking at our chart, doing our markup. We have time. We're not going to miss our move ever because we're going to see exactly what we want. So I'm zooming in on the 1-hour time frame, and I just want to see how the market is treating this area. Now we have a bearish candle right here that closed within this wick and then retested it and came back down. So I'm anticipating that people are going to think that this is going to shoot down right here because it's retesting this area. But we do not have price action. So that's what I'm looking for right now. I see on the monthly time frame that we had a lot of bull momentum, right? I'm not using any indicators at all. I'm just looking at the market structure. I saw on a weekly time frame that the market came to this area and is retesting this area right here. The market does not just go up, it does have to retest to collect more contracts, gather more money to continue moving forward or continue making its move. So we're going to get into the daily time frame. I want to see if it's holding highs, and it's at a key area of reversal. I do understand that. It doesn't mean that it's going to reverse right here. It doesn't mean that at all. We're looking for price action, and we don't have a lot of price action right here. So I'm going to start with the 4-hour time frame. No bearish engulfing candle. I see wicks down to the downside, but I also see that the buyers are well still in the market. So we have a fight right now between the bears and the bulls, right? So All we're waiting for is who has the upper hand. I do see a retest of this area over here. This is the 1 hour time frame. I already know to the left that this is a high. So do I have any price action as yet? Let's go to the 15-minute and see what we have right here. Even right down to this area. Look at that. It's a lot of consolidation. There's nothing right now. So we're going to wait and see what EU does. If we were to sell this, I would have sold it from right over here. Why? Because the bulls came in, and immediately right after this candle, the bulls were no longer in. So that would have been a good sell right over here. But for right now, our stop loss would be, no, well above this high, right? 40 pips to make 40 pips, like just to break even. It's going to go down more, but we don't want that. We want to make sure we're on the right side. Now, just because it's moving down as we're watching it, doesn't anticipate that's going to give me a sell. I see the candlestick pattern, which would be the left, head, right, retest down. Now it's retesting the area again. But if you were to, let's just say we put in 100 EMA, right? And if price is above the 100 EMA, then it's an uptrend. So is this the pullback for you, or is this the breakout of the sell? Let us know in the comments what you think about this pair, because it's up for debate. This is why I said it's a good conversation. This is why I like there's two sides to look at it. You can use indicators and they'll tell you one thing, or you could look at market structure and just look at a naked chart and see what you see. And that leaves up the whole debate for smart money and dumb money. Now, let's go look at UCAD. Dollar was anticipated to move up, as in gather back its strength because of how low it's been. So let's take a look at UCAD. You can see this is a US, this is a dollar dominant pair. So just straight, this is just down, right? So we're gonna go to a 4 hour. Don't worry about them arrows. We're gonna go over the arrows. Okay, so this was in June. All right, we had this low, and now it's retesting this low. So I marked this area across because we can see that it's holding this area. So while we were over here, everybody anticipated like, okay, this is selling no matter what. Now we're at the first area. Is it going to break down and pass this zone, or is it going to reverse at the zone? Find out next time on the next episode of Dragon Ball Z. Now stop. So what I marked up was, I knew that the dollar was coming down, so we know that UCAD is going down and secondary pairs, etc. So we want to know now, what can we gather from our higher time frames and our lower time frames? So this is UCAD, retested this high over here, so we can say that this might go down even more because it retested this area, didn't go for the buy, or came and touched this area, the bulls did, and coming down over here to gather more money to move up. You got to be able to see both sides. And if you look at the other videos I've posted, you can learn about adapting. We make money both ways as long as we're willing to adapt. So I don't see that the sellers are that strong until this area. Now the buyers came in, and this could form a double bottom for this area over here. That's on the weekly time frame. On the daily now, we're going to see going down that this side, this low is going to be held. This is why we mark it, this area, and this area. So we want to wait for price action to see if it's going to go past this area. So far, it hasn't. And it's been stuck here for a couple days. So I want to see now, I've marked up these 3 touches, which would also indicate a triple bottom, which is a good indication that the price will turn around, reverse. So we're on the 4 hour. I'm just going through the time frames, top-down analysis, seeing from the high to the low. I want to make sure that I understand what is happening right now. So in these areas, what is happening right now and what has happened before. I don't see it. So this is just consolidation. This is ranging right here. Consolidation. Why? Because bulls aren't winning and bears aren't winning. It's all about strength. This is what we teach at Forex with Finesse. You don't have to make it complicated. You can keep it simple. I like to go over strength. So you don't have to say like, oh, look at this wick over here, or look how it's touching that zone. Who's winning? The bulls or the bears? Keep it simple. So triple bottom, holding this low, and we want to wait for price action. So we're gonna hit the 15-minute and see what's going on. So I would wait for it to come back down some more, and the probability of this trade would be we risk 20 pips to make 10 some. So we could buy UCAD. Actually, yeah, let's buy UCAD. That's worth the trade. Because why not? It's third touch. Yeah, let's buy UCAD. All right, and this is our chat over here, so I'm gonna send that by USD CAD, and we'll have a stop loss of. Nah, we don't need that much. Yeah, 22 pips. Okay. Now the reason why is the risk to reward. We're risking 20 pips, right, to make 40, 50. Stop loss is already at break even at this point, right? And what's our price action? We have a triple bottom. Is our risk very high? No, we're only risking down to here, right? So make sure we put this in. Get that up here. Get that there. There we go. All right. So then we can switch back to EUR USD and see this here, but I don't like the fact that it's 30 pips to go make. But yeah, I don't really like that too much. If it comes back up and retests a little bit more, then we can get in for the sell over here. But I'm still going to keep an outlook for this. And the reason why is because it has a nice formation, right? We have some good candlestick patterns. Sorry, we want to wait for some good candlestick patterns. We don't have any good candlestick patterns. We have a nice big one over here, which is pretty nice. So if you want to get in for the sell, go ahead and risk 20 pips. Well, actually 30 pips. But I'm going to wait for it to retrace some more. And if not, then we leave it alone. That's how you compound your account, and that's how you save. That's actually, yeah, that's how you compound your account. There's no other way to say it. Guys, if you have any other questions, please let us know in the comments. We look forward to hearing from you. We love trading and we love updating our students and ourselves as mentors. We're also always students to the game because you learn something every single day, and we love hearing different perspectives on how to trade. So please reach out to us at tradingwithfinesse@gmail.com. Follow us on Instagram and Facebook at Forex with Finesse, and we'll see you guys in the next training session. Take care, guys.